The Australian unemployment rate came out last night and it was expected to drop, but instead came out unchanged at 3.5%. After disappointing results for US PPI and retail sales, the dollar and the US economy had some good news today as unemployment claims came out less than expected at 190,000. I want to remind you that you can watch us live in the markets every day, Monday through Friday, starting at 9:30 a.m. Eastern Time. All right, so here we are in the EdgeFinder. We're going to start off like we always do by taking a look at the market heat map first. We've had a pretty slow news week today, or this week, and today was not really any different, but luckily the markets never sleep. Those are always changing. So let's go ahead and see how all of our assets are trending so far today. Starting off up here with our major US dollar pairs. Most of them are down on the day so far, with NZD USD and Aussie USD shooting down somewhat significantly. Aussie US down 0.77% on the day so far, and NZD US down 0.96% on the day so far. USD CHF, our biggest mover to the upside when it comes to US dollar pairs, and that one is only up 0.13%. Major US dollar pairs, I should say. We do have USD ZAR here, which is actually our biggest mover to the upside so far today, up 1.5%, but we just keep these listed as our major US dollar pairs. Major indices are all down on the day so far. All of the indices that we track are down on the day so far. JP225, German 30 are 3 US indices, as well as the UK with 100, with the JP225 being down the most, down 1.44% on the day so far. Taking a look at all assets, I can actually see that US oil is up 1.18% on the day so far, so a good start for oil. And how about gold? If we look for XAU USD, I have missed it. XAU USD. There it is. I missed it. Up 0.74% on the day so far. Taking a look at our euro pairs, not a whole lot of movement other than euro AUD and euro NZD. Those have moved somewhat significantly. Euro NZD up 0.96% on the day so far. Euro JPY down 0.23% on the day. Our pound pairs mostly up on the day. GBP NZD up 1.14%. GBP JPY down 0.15%.
Are you brand new to trading? Do you have a strategy that's not going so well and maybe you think you need some help, or maybe you just don't even know where to start? Well, lucky for you, A1 Trading has a trading help desk. All you have to do is fill out this form. At the bottom of the form is a list of things that you might need some help with. After you select that, we'll send you an email with a playlist of free videos from our YouTube channels, some tips on where you might want to begin, and even examples from our in-house traders and what they do in these situations. We'll even give you a peek at some trading tools that we provide that could help. Use the link in the description, the A1 Trading Help Desk. Click that link and get started now.
All of our yen pairs moving to the downside, NZD JPY being the most significant, down 1.13% on the day. Swiss franc pairs looking split. NZD CHF down 0.8%, GBP CHF up 0.27%. Australian dollar pairs and New Zealand dollar pairs looking the same. Those are both split as well. Aussie JPY down 0.94%. In NZD JPY, like we already mentioned, down 1.13%. GBP AUD up 0.85%, and GBP NZD up 1.14%. So a lot of movement so far today. We'll see what the watch list looks like with our buy and sell signals. If we take away these neutral biases here and our indices as well, we are left with, wow, not a whole lot of buys. NZD CAD strong buy, score of +7. USD CAD still a buy with a score of +4. We have no strong sells at the moment. Aussie NZD, Aussie US, and GBP JPY all tied with scores of -5 sell biases. So why don't we take a look at AUD USD today with a sell score of -5. We're going to take a look at AUD USD. And you know what? This is actually a good one to take a look at because you're getting a sneak peek at our new EdgeFinder layout. This is what all of our currency pairs are. We're still working on it. We're still working on it, but we are getting closer and closer to having all of our currency pairs look. We have this nice, clean, new layout. We're still making tweaks here and there, so this isn't 100% the final product, but this is getting close to what it's going to look like, and soon we will implement this for all of our different currency pair assets are going to get this new look. But we can go ahead and look at it now, and we can see that we have a score of -5, like I mentioned. COT data is a score of -2, and the retail sentiment is a score of -1. Taking a look right over here under our sentiment section, we can see institutional traders favored long 66.12% on the US dollar, 33.88% short. And for the Australian dollar, 67.9% short, 32.10% long. So favored short for the Australian dollar, favored long for the US dollar from institutional traders. Retail traders, on the other hand, 70% long and 30% short from retail traders. Taking a look at seasonality, we can see up here that historically speaking, our last 10-year average shows it being just a little bit bearish in the month of January, just barely below this neutral line here. In fact, it might even be so close that it does just kind of come out as neutral. But historically speaking, we don't see big spikes or big jumps for AUD USD in the month of January when we're taking a look at the 10-year price point average. Our trend reading, on the other hand, is our one blue box here with a score of +2. And over the past couple of days, we have seen some slight movement, and price forecast based on how it's trending over the past couple days does say that it could potentially move more to the upside. Although when it comes to COT data, retail sentiment, and fundamentally speaking, it does look very, very bearish. So more than likely going to continue moving to the downside. So let's finish up with our fundamentals right here. GDP growth, inflation, interest rates, all scores of -1, unemployment, a neutral score at 0. And we can take a look at that fundamental data right over here. So we're going to go through our Australian numbers first. We have 0.6% GDP growth for Australia, 7.3% inflation, 3.5% unemployment, and 3.1% interest rates, whereas the US dollar is 3.2% GDP growth, 6.5% inflation, 3.5% unemployment, and 4.5% interest rates for the US dollar.
Anyways, what I want to show you guys here before Frank joins us is I'm going to go ahead and take a trade, and then we'll talk about it. So let me get this up on the screen here. So I'm going to be taking a long position on the S&P 500, entering back into my trade. So let me go ahead and do that. What I'm going to do is we're going to need a couple minutes here just to let me take this trade before we bring Frank in, if you guys don't mind. So let me just do this. Market. I'm going to be taking 200 shares here long in the SPY. This is the S&P 500. And the stop price here, I'm going to be going to put my stop below the low here of January 6th, which is going to come out to about 378, let's call it. So we're going to put 378 here. So this is a trade I've had my eye on. I'm going to go ahead and pick this one up. So just give me 1 second to make sure everything is good here. I'm going to go ahead and, I need to unlock my trading really quick. So we are going to go ahead and buy SPY. So I am long the S&P 500 here this morning. Give me 1 second. I'll get this all sorted. Oh, are we good? Okay, we're good. S&P 500 long. I just picked it up. I got to pick it up in my tracker account. Give me one moment as I do that, and then I'm going to be sharing the trade alert within the VIP group. For those of you who are in there with me, just give me 1 moment to do so. I'm going to be setting this up. So again, stop loss is going to be below January 6th low. So going to be risking a bit of a risk there. But of course, nothing massive on the account size. Let me go ahead and get this information filled in. So again, I just picked it up long. And the long thought process here is it's coming back into a level of consolidation that I really like. Holding this area, I'm looking for this thing to explode off this level. And if it doesn't, stop loss is below the lows if this thing gets taken out. So it's a bit of a longer term trade because, again, it would take some serious sell-off to get us back down there. But that's kind of where we're at with the trade. So let me go ahead and fill in the information here to members within our Discord channel. Give me 1 second to do that. So new trade, copy this over. And I'm going to pull up the Discord channel really quick so that we can do that. Pull this up. And then we're going to fill in this information. Let me take a screenshot and screenshot here. Okay. Bam, bam, bam. Entered that. And basically, I'm just re-entering a trade idea that I had the other day. So let me go ahead and do this really quick. I'm going to update this. Okay. Re-entering second time here on SPX 500 at major support. Price breaks beneath the January 6th lows. I will be out of this trade. Take a small loss. Okay. So there we go. And again, a bit of a wider stop loss on this one. This one is definitely it's not a day trade by any means. This is a trade idea that I'm giving this some room to move on the S&P 500. So we are in the trade. Like I said, trade is active. Let me make sure. Yep, everything is good. We're in the trade now. Trade alert has been shared with members. So we are all up to speed. Remember, guys, you can see all the trades being shared within our Discord channel. And if you're not in there already and you would like to be, then make sure to click the link in the description. You can sign up for a membership with us. We also do have a free one available. So before we move on, let me remind you guys, you can get access to the free Discord channel by clicking the link being dropped in the chat. Frank, what are we looking at here?
Okay, so I am also in the S&P. I got in this morning, like 30 minutes ago. I was trying to get in before the opening bell, but I don't know if my screen is sharing.
Yeah, you're good. We can see your screen now.
Okay, I just wanted to show this. So it's been respecting this falling trend line for a while, and then I see also this sort of wedge pattern forming. And yesterday's sell-off really kind of like sparked what I think could be a good like buyback here at this level. But just in case, like I said, a stop loss underneath that rising trend line.
Yep.
But I'm hoping for a wedge breakout here because I think it's got the potential, especially this morning we saw jobless claims fall, which is a pretty good sign. So
yeah, there's one thing I will say too, Frank, with the S&P stuff is we have that downward trend line, and a lot of traders are super afraid of it, right? That longer term downward trend on the S&P. But if that trend line breaks, the movement could actually be pretty explosive. So I'll show you what I'm talking about just so you can see. So S&P 500 longer term, right? It's hard to deny the fact that, bears have been in charge of this market for a while. Despite that, though, CPI numbers have been on the decline. We've seen some healthy numbers in terms of CPI. Yes, retail sentiment yesterday was ugly and pushed back on the S&P bullishness. But that on that off chance that, this comes back in, forms that higher low, and is able to break through these highs, I think you and I are on the same page. There might be a nice run there.
Yeah, we've been wrong a couple of times already, but hopefully
we've been taking a little bit of a beating trying to catch the S&P pullback, and we'll see if that continues to be the case. But what was that other chart that you had pulled up a second ago? What were you looking at next?
So I'm also in gold. I got into that probably a minute after the stream started, but it's more so on a technical scale because I've been watching COT and like the increased interest in that, and the directional bias is pretty steeply upward. But I also saw this morning that this candle is trying to retest those highs. So I'm trying to see if that can break to another higher high and we can see potentially another move towards 2000 mark.
Yeah, and that's the thing with gold is it seems like it's. So here's the thing, like in terms of gold is bullish for me until proven otherwise. Like if that thing starts breaking back the other ways, then sure, we could talk about like, oh, this looks bearish. But right now, gold is in such a heavy momentum push. And fundamentally, there's that argument for like, okay, people are afraid of recession. There's layoffs happening everywhere. Unemployment could spike. And with that, could cause a lot of people to rush to gold. So there might be that sort of that gold trade that continues to play out here in 2023. We'll just have to wait and see. So Frank, did you say you're long gold as well?
I am.
Okay. So for our positions tracker on the down below section of the screen, we're going to try and keep this up to date.
on trades that we're in. So Frank is long SPX, but now he's also long gold. I'm a long SPX. So that's kind of our current positions. Frank, thank you for filling us in. We'll move on with the stream, and I guess we'll catch up with you back tomorrow.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the EdgeFinder, you can find that in the description as well. Thanks for watching.